Matthew, Sales Manager at Rocky Real Estate. I am here with Manan from Equifirst Capital, and today we're going to discuss basically the real estate market in 2024, where we're at, where's the market going, and how it's performing at the moment.
Thanks, Matthew. It's a good opportunity for both of us to actually sit down and talk. You know, obviously you represent the real estate side for the property purchase. I look at the finance side. And with the way things are going, obviously there has to be a lot more cohesion between both the sides. Clients are looking at more and more ways of actually borrowing money to start investing. So I'm going to actually throw the first question out to you.
Yeah, sure.
Which is, we speak to a lot of clients, and invariably, somehow the question just keeps coming up. Is this a right time to buy?
That is a question we get all the time. We never say no to this question because, again, it depends on a couple of factors. Depends on the client's personal circumstances. But if you look at it from a market perspective, of course, prices have shot up, and that's the main objection that we get. But at the same time, rental prices are increasing in line with that. Mm-hmm. So you are still getting a return on your investment. Do I see the market crashing, which is what everyone's objection is to that, is no, I don't. Mm-hmm. It might slow, it might correct itself in a way, whereas we're not seeing the up that we were getting previously post-COVID, but I think it's still going to go up. When you look at the bubble index of the world, we're at the bottom. Dubai is really safe in that sense. Mm-hmm. People are still coming to Dubai. There's still investment coming into Dubai. For example, Al Maktoum International Airport, DWC. Yeah. That's just been announced a couple of weeks ago and Emirates is moving their operations there. Dubai South as a whole now, prices shot up. Developers are now moving to Dubai South. We have Emar launching, we have Azizi there. We have Damac launching there now. So it just shows that there's strength in the market still. Right. People still have confidence in it. Yeah, we get asked these questions, but there was 15 billion dirhams worth of transactions last week. Yeah. There was over 5,000 units transferred. So people are still buying, there's still confidence in the market, prices are still going up, properties are still being rented, off-plan is going through the roof at the moment, there's so many new launches. Yeah, it's coming up to summer, so that will slow down, but there's no signs in the market slowing.
The horizon's still like positive and growing. It's an interesting thing that you mentioned about rent, because we, even as mortgage brokers, is something that we've been talking to real estate agents and even clients. A lot of the clients who call me, I invariably ask the question, why are you buying? Because whether it's an end use or an investment, it kind of changes the dynamics and the requirements of a client, and ergo the financing that he's going to require for it. In terms of just rental numbers or figures ending for 2023, there's been a 28% increase in rental just between 2022 and 2023, whereas property prices have moved up 18%. I don't want to say only an 18 in the same sentence, but there's this massive gap between where the rental market is and what that asset itself is appreciating at. So it is actually still a great time for people to start converting from being tenants into landlords. Start looking at like buying their own asset, because if the trend continues, you'll get priced out of your own house because the rents have moved up that much, right? Exactly, and it's a massive difference between 18% and 28%. We've already seen that in areas like Dubai Hills, where someone who bought the house for like 3.5 million 2-3 years ago, and that same house is 7 to 8 million dirhams right now. They couldn't buy that house today, right? Their income hasn't increased to be able to adjust for it, but the property prices have.
That's the forecast of the market and where we're kind of going at the moment. So let's talk about interest rates for mortgages.
Sure.
What are the current interest rates for mortgages, and where do you see that going?
In terms of current interest rates, they range, let's just say between 3.8 to 4.5. This is like just a general bandwidth. You get banks at higher, lower, but generally like 3.9, 4.5 is where most of the banks will end up sitting. What the outlook is actually kind of interesting, because there's been drastic change in what the Federal Reserve was claiming and saying in December of last year. They wanted to cut rates. They were very sure about it. And since we're tied to the dollar, we kind of have to follow what the Fed does. They were looking to having multiple rate cuts this year. But since the start of this year, they've been very lukewarm about it. They've not increased the interest rates, but they've just kept them the same. So what the outlook is, they're expecting maybe one rate cut by the end of the year for maybe 0.25% or something, but majority of these rate cuts will end up moving to next year. That also, I think, is hugely dependent on the US elections, who actually gets into power and so on. So it feels like people are just kind of kicking the can down. But the general consensus is, yes, rates need to start coming down. You cannot carry on at the level that they are, which invariably again ties in with the real estate side. I mean, if you're making it cheaper for people to borrow money to buy houses, the demand for purchase ends up going up, right? And like you were saying, in terms of the outlook for the market, if you're increasing demand, price tends to move, and the only thing that kind of pulls it down is supply. With Dubai's view on like wanting to hit 6 million people by 2026, the supply is not going to pull a massive downward push, right?
Still
exactly. You will see stabilization of prices and even just a gradual tick up, but I don't think we're in any risk of the
market dropping.
Thank you. But you're not expecting the markets to crash. I don't think we're in any danger of that. What you would look at is stability, prices stabilizing.
So how does that work for tenants moving to buy their properties? Are you seeing an increase yourself?
100%. We're seeing a lot more tenants. Like majority of the people that we speak to are tenants now converting into being landlords. And this is what people don't realize, right? Or people who are stuck at being tenants right now. Say you take a property worth 2 million dirhams, right? And you're talking about a rental yield, or you pay a rent of 120,000 dirhams on that. That's roughly 10,000 dirhams a month. Over a 25-year period, even with today's interest rates, your mortgage payments are 10,000 dirhams. So you're pretty much at par with what you would be paying. The hindrance over here, or the impediments, is the down payment, right? Which is the capital that is needed to be deployed. The other thing you have to look at is, with a mortgage, you're building your own asset, and with rates going down and you making a payment into your mortgage, it's just going to get smaller and smaller as time goes on. Whereas rent today is, let's say, 120. Tomorrow it could actually go up. We also have a lot of clients who, with the new RERA regulations, right, with the rentals need to be adjusted. There are, and it's as great it is to have rent low, but it's unfair to the landlords who bought that house. They didn't buy it at COVID prices, but they're stuck at COVID rents, right? So the change of having to kind of update the rental index it's fair, and I think it's equal to all parties, and it's actually causing people to end up buying more houses as well.
Because I'm seeing that personally as well. There's a lot more tenants now that are looking to buy their properties. I'm seeing that from clients, I'm seeing that from friends as well. So the demand for buying properties from existing tenants is definitely increasing. The question I get from my clients, which would be good to clarify from yourself, is with regards to down payments, as you say, can you tie in certain fees to the mortgage, or do you have to put everything up front?
No, you can actually. So when we talk to a client, generally they just keep talking about the down payment. I have enough for the down payment. We kind of like to look at it as, it's not just the down payment, but do you have the cash required to take care of the charges, the DLD fee, the agency commission, and so on. So it's not a matter of having money for down payment, it's a matter of, do I have total capital that is needed
for everything.
So there are banks that will actually help finance the DLD fee and the agency commission, right? Normally these charges are about 7% on top, out of which 6% is DLD and agency commission, right? So that's a fair bit of relief that people actually get, that I can now, on the same terms as my mortgage, kind of absorb these fees as well. So it makes that hurdle of initial cash deployed. Initial cash deployed much better for them. There are other incidences as well where if people already own assets, you can take equity out of those assets and kind of supplement the down payment as well. So there are options available.
To make the process easier, basically.
Make the process easier and kind of just utilize the assets that you already have, because people kind of sometimes tend to forget that they own that asset and it can be put to work.
True.
Let me ask you this. We get asked the question a fair bit, right? Is what are the prime areas to kind of look at purchasing? Okay. And I know it kind of depends on the client's profile and so on, but in your opinion, given how the market has moved, are there still areas which I don't want to say undervalued, but let's say something that can maybe outperform the market?
Yeah, absolutely. So I'll give you a few examples. For investment, Dubai Creek Harbour at the moment is an incredible location. It's still a new development. This will be going on for 15, 20 years maybe. Obviously there's talks of the tower, there's talks of the mall going there and everything else. At the moment, the island's ready and the beach is half ready and it's still being constructed to go inland. Dubai Creek Harbour is an area we've seen great success in the off-plan resale market and in the secondary market. Off-plan launches are scheduled continuously from Imad for the next however many months as well. So Creek Harbour is definitely a location that I would suggest. A lot of people are moving there, they're renting there and they're buying there for end use, for their own use as well. So it's not just for investment. Obviously the investors are picking up the off-plan units and the off-plan resale units, and then the end users are typically picking up the ready units. That is going to see massive capital appreciation for its location, but also for its amenities, i.e. the tower, the mall. It's got a beach, it's got an island, it's going to have its own districts and its own kind of city vibe as well. That's one of my favorite locations. If we move further into Dubai, I know everyone talks about this. Some people love it, some people hate it, but JVC. JVC is always going to be one of these areas where you're going to get a very, very good ROI. Everyone rents there. It's kind of the go-to place for people just moving to Dubai. And even for those that stay in Dubai for a while, I think it's like once you stay in JVC, it's kind of difficult to move out. You get comfortable. There is a lot of Brits that live in JVC. It's a very British-dominated area, but there's still so much investment going into JVC. There's still so much development. There's still so many towers under construction, and it's a more affordable area. Great location, great accessibility, great ROI. So for me, that's another area that as an investor I would look at, and again as an end user, to be fair. The latest location I mentioned earlier, Dubai South. In the beginning, everyone said it's way too far, no one's going to go there. But as Dubai expands, it's not as far as it was before. Now that DWC has been announced, Emirates is moving there, there's been such a big focus on there, like I said earlier, that all the developers are now buying up land. They're launching whole master communities. They're expanding on their current communities. Mm-hmm. So for an investor right now, Dubai South is an incredible place. You will see great returns on your investment if you get in early. Okay. For people that are renting and buying now, there are ready units already available in Dubai South, Imar South even. The prices for what you would get in these locations versus anywhere else in Dubai is so much more affordable. And that's why people are snapping them up now, for both buying and for renting. So for me, the top three areas, JVC, Creek Harbour and Dubai South.
Which I kind of, just an add-on to that is, let's talk about off-plan, ready, and land.
Okay.
Where's the value? Well, again, I know customer requirements, so on, but just generally speaking, where's the value in all of them?
Okay. Off-plan at the moment is going crazy. There's new launches galore. Post-COVID, obviously, we were short of villas and townhouses. So any villa townhouse community, any launch that any developer had was selling out instantly and prices were shooting up. We are getting more supply, so it's getting better, more achievable, more accessible. But let's say off-plan, again, Creek Harbour, as I just mentioned, there's so much development happening there. It's a whole master community that's going to be there for the next 10, 15, 20 years. There's still so much more to come. That's one area where you can buy and you're kind of safe. It's not a guaranteed return, of course, but if your investment's safe there, you will see a return. Again, Dubai South, you can't go wrong there. It's an area that is just going to keep launching new projects. So for off-plan, I would say that land anywhere in Dubai is gold, really.
Okay.
Anyone wants land. From us at Rocky, we've had a lot of interest in Jeddah, Furjan. We have had interest in Dubai South as well. But Furjan is quite interesting, and Jeddah, because they are developed. I mean, Furjan is developed, but there's still a lot of accessible land there. So these are the places for us that we're getting a lot of inquiries for land from developers that want to launch their own towers. Ready units. Again, it depends on the client profile. Our main focus as Rocky is Marina, Business Bay and downtown. A lot of our clients are interested in these locations. Yes, they're old now, but they're like the two prime locations, shall we say, in Dubai that aren't going anywhere. Emaar have just announced a 1.5 billion dirham investment into Dubai Mall. They're going to be adding 240 new shops and food and beverage outlets. So these places, yeah, they might be old, but there's still projects launching, they're still expanding their amenities. You can't go wrong with these places. And for us as a company, that's the kind of areas that most of our clients are interested in, to be honest, for their own use. So as a business officer, I was just saying that downtown, Business Bay, Marina is quite prominent locations for us. So we get a lot of inquiries from foreign investors. As you know, these areas are, a lot of foreign investors invest in these areas. How does it work with mortgages for non-residents?
So first things first, yes, a non-resident can get a mortgage in the UAE. The process is fairly simple. You can get up to 60% of the value of the property. So if you're buying a 2 million dirham property, you can get like 1.2 million dirhams of financing, and then 40% becomes your down payment. In terms of how they do it, it's a little bit more evolved of a conversation, but the essence is we kind of establish what is the client's income in his country of residence, and then based on that is what determines his eligibility over here. But in a nutshell, yes, it's very much possible. Surprisingly, a lot of people ask me that they're not aware that non-residents can get a mortgage. And given how everything is in Europe right now, the UK as well, there is a massive influx of people wanting to move here, and they kind of want to also take part in the success story that's been Dubai, right? Yeah. So they don't need to have the full cash, they can actually buy it on finance.
So off the back of us discussing tenants looking to purchase their properties, obviously rental rates are going up, kind of the increase in prices is steadying, that we're seeing. So with regards to mortgage rates, would you advise getting a fixed rate at the moment, or do you think a variable rate would be beneficial to the client?
The best way to actually answer that is it's very dependent on the client. Okay, it's like what kind of property someone wants. Right? It's both those products, whether someone goes fixed or variable, do provide their benefits. A fixed rate provides you a hedge against interest rates, right? So an upward movement of interest rates. It also provides you with stability, predictable cash flow. So you know for the first 3 years or 5 years or 2 years, whatever you're fixing the rate for, you know that there's not going to be any variance in my pay. And that actually provides clients with a fair bit of comfort. However, in the long run, they tend to be more expensive than variable rates. If you took a day one variable, you have none of the protection. You're open to the market from day one, interest rates skyrocket, you kind of bear the brunt of it, but when they go down, you also reap the benefit of it. So variable from day one is something that a person should consider when they have more disposable income, where they're like, okay, if my monthly installment moved up by like 1,000, 1,500, whatever, depending on the size of the property, it doesn't really affect them. But I know in the 25 years I'll be more cost effective. Variable from day one works for them. Okay, but if you're someone who says, look, I've just deployed a lot of capital into this house, I really cannot deal with the market as well. Fixed works out because you're valuing different things between those two products, right? As of right now, even with rates poised to go down, they're not going to go down aggressively. All right, they're going to go down slowly. They're not going down as fast as they went up. So most of our clients are happier to take, like, let's do a fixed rate for 3 years. A 5-year becomes redundant to do. 2 years, 1 year is just forget about it. Don't do it 1 year. But a 3-year is a nice sweet spot where you're giving the market enough time to start coming down. So the moment you get out of your fixed rate, you're into a kind of softer market with your variable, right? So most of our clients are actually picking a 3-year variable. 1 year just does not work, and even if you look at the pricing, 1-year rates are higher than 3-year rates because there's far more volatility in the short run on interest rates than on the long run.
Makes sense. Yeah. They've got the stability for 3 years, and then they can reap the benefits afterwards.
Yeah, like your margins will be higher compared to variable, but you also took the benefit of kind of riding out the market as it softens. So a lot of our clients are actually picking fixed right now.
So in general then, if a client comes to us, they're looking to purchase a property, they're inquired about a mortgage, we would then obviously refer them to the mortgage advisor. So what is the kind of process and the timescales, and what does the client need to have documentation-wise?
For example, there are cases where everything's ready from the bank, but a title deed needs to be issued, and the developer has taken like a month to issue it, right? So these kind of timelines kind of add on, but yeah, generally speaking, a regular case 3 to 4 weeks. A slightly complicated case should be like 6 weeks.
So not a huge amount of time then?
No, I mean, even if you compare it, like if someone was doing a cash transaction, right? Like how long does it actually take to go to transfer?
It depends on how ready the cash is.
Exactly. Right? Like,
so there's always variables to it. It can be done within a couple of days. It can be done within a week or two.
Yeah.
So yeah, again, it's depending on case by case basis.
We've kind of mapped it out. Like there's generally a week, 10 days difference between doing a mortgage transaction and a cash, with the obvious exception with someone having the cash ready today.
Of course.
And you go tomorrow. But
because I think the general consensus is mortgage takes a very long time.
Yeah.
So that's why sellers at the moment, or what I've seen previously, always prefer cash clients because it's a lot quicker. But it's good to know that in your experience, it is only maybe 10 days different.
It's literally just 10 days difference. But one thing I will say about the sellers who are looking for cash buyers, I mean, yes, it's an easier transaction, right? And they don't have to worry about valuations and so on. But opening up to the mortgage buyer significantly increases your target market, right? You may think that fine, the cash transaction happens faster, but it also takes longer to find that cash buyer, right? Because like now you have maybe 1 in 10 people who would be interested in buying the house. But if you open the playing field to someone who's willing to do a mortgage, now you might have 6 more buyers who are willing to buy your property as well, right? So we have to look at like overall time, not just from the time someone agreed to move forward.
Exactly, especially with this influx now of tenants looking to buy their own houses. A lot of them won't have the capital to buy a property cash, and they need mortgage. So it's kind of limiting them on what they can purchase as well. So opening up from both sides, I think, would do the market.
And if you look across the world, normally properties are bought on finance. They're not really bought in cash. The UAE statistics are 30% of the UAE's real estate market is actually running on mortgages. The rest is cash. It's on cash itself.
That's flipped pretty much everywhere else.
Yeah, everywhere else it's kind of flipped. It's over here that it's still kind of holding on. But like you said, and what we are seeing is that trend is kind of slowly changing. And it's also to do with property prices moving up. Because I don't know how many clients have you spoken to. You spoke to last year in the summer, and they were expecting a correction, and they were going to, go buy. And now the house for like 3 million that they were looking to buy is now maybe 3.5. So they're always playing that catch-up game. So even while they were trying to save cash, now they're being kind of forced into taking a mortgage because they have to make up the delta, because the market is far more dynamic than people believe. It's not
100%.
waiting for you to kind of collect your capital and then go do the transaction, right? If you're lucky enough to have the cash,
then do it.
Go for it.
Yeah, I see that a lot from European investors, because I'll use the UK as an example. It's a lot slower market than here. People can take their time when buying property. So when UK investors come here and they invest for the first time, and when the brokers tell them you have to make a decision on this quite quick, it's almost a case of they shut off because they think it's a pushy sale. Whereas in reality, it is very quick. It's a completely different market, and it's about the broker educating that client on we're not being pushy, we're advising you on the best way to actually secure your investment, because if you don't, it will go.
No, that's where like quality brokers are really important, because you're right, they're not trying to be pushy, but there is an urgency, because there is a seller on the other side, and a lot of times the agent doesn't have exclusivity to the property, right?
Exactly.
So there are other agents who are doing viewings for the same property, and you don't want to get into a bidding war with 4 other people, right? So yeah, the market is moving pretty fast, and decisions have to be made equally fast.
Yeah, I agree. It's a lot of foreign investors are seeing that as well, and it's literally good brokers that need to educate these clients on this is how it works here, and that's how it differs from your market.
Just on that, how are you finding supply on the secondary market? Because that's the other thing that we always kind of hear is, I just can't find a house.
There's certain areas in Dubai that you can't. It's very difficult. I think a lot of clients have got a lot more picky these days, or they're limited to where they can go due to the price increases. So people are looking more further afield now because it is more affordable. But there is still stock out there. What we're finding is a lot of sellers aren't looking to list their properties.
Okay.
A lot of sellers want to sell their properties but off market. So again, it's the quality brokers that need to have these relationships with these sellers to say, look, let's list your property, because we can expose it to the world really through social media these days. And you'll sell it a lot quicker, and you'll get the price that you're looking for. I think it's the broker, how long they've been in the market, how good of a broker they are, that has the connections with these landlords that can get access to properties. I think it is tight. It's not like everyone's looking to sell. Like I said, there is a lot more end users now than investors. Hence why we're seeing a shift to off-plan resale. Off-plan resale in the past few months, and what I believe will take us through the quieter months of summer, is where the market is quite hot at the moment. A lot of end users are looking to secure these units before they appreciate. So when it comes to handover and these investors are looking to sell, of course the price goes up of these units. So end users now are looking to get in while they've still got their tenancy contracts running, so they can secure a unit. Upon handover, they then move in. So that's where I'm seeing a shift to buyers' requirements, really. I think there is still a lot of inventory out there. It's just the type of inventory that the buyers are looking for now differs. Again, it's from client to client, but I think again we've seen a shift from tenants looking to buy. They are looking for affordable housing, so they're not going to go into the areas that have skyrocketed, like Dubai Hills, for example. The prices there have increased astronomically, so they are looking further afield. Damac Hills 2, MR South, Dubai South, Expo, kind of these areas where they can get bigger properties for a lot less. Thank you, Manan. It's been a very enjoyable chat. Great having you here today.
Thank you for having me here.
Absolutely. And for everyone, if you have any questions for either myself or Manan, our contact details will be below. Feel free to reach out to us.
Thank you.
Thank you.